Today, Ether dips the day after the launch of spot ETH ETFs in the US. Ferrari says it will now accept crypto payments in Europe after starting in the US 9 months ago. And Andy Baehr with CoinDesk Indices breaks down what the approval of spot Ether ETFs in the US means for crypto markets. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Major cryptocurrencies trading lower the morning after spot Ether ETFs launched here in the U.S. As of noon Eastern, Bitcoin dropped more than 0.5%, but still traded above $66,000. Now, this comes shortly after Bitstamp announced Mt. Gox customers will start receiving payouts from the defunct crypto exchange through Bitstamp tomorrow. Mt. Gox, which was once the world's largest Bitcoin trading exchange, went bankrupt in 2014 after a massive hack which led to hundreds of thousands of stolen Bitcoin. As of noon, Ether dropped more than 1% even after spot Ether ETFs officially began trading here in the U.S. yesterday, putting the world's second largest cryptocurrency in a vehicle favored by many professional investors and advisors. Solana, however, rose less than 1% to nearly $178. Taking a look at spot ETH ETFs, the new funds come from traditional fund issuers, including BlackRock and Fidelity, as well as crypto-specific companies like Grayscale. The move marks another step in the increased integration of digital assets into mainstream finance. On day 2 of trading, the funds are in the red by about 1% as of around noon. Now, in order to attract clients, many of the funds have temporarily waived fees, but after those waivers, management fees range between 0.15% and 2.5%. Grayscale is offering both the cheapest and most expensive funds. The crypto asset manager is effectively converting its multi-billion-dollar private Ether fund into 2 ETFs with different price points. Okay, let's talk about the top stories. Coinbase continues to push for internal SEC communications in its ongoing lawsuit with the SEC. This court document filed by Coinbase yesterday addresses the crypto exchange's subpoena of SEC Chair Gary Gensler and other discovery disputes. The filing says that the exchange was unsuccessful in its many attempts made through June to collect documents from the agency. That includes those related to Coinbase's IPO and Gensler's communications. Now, Coinbase withdrew its request for Gensler's pre-chair communications, narrowing its requests in yesterday's filing. Coinbase's chief legal officer took to X yesterday to spell out the documents currently being requested, saying they relate to the tokens the SEC included in its complaint against Coinbase, the SEC's consideration of the company's public offering, and statements Chair Gensler made personally and professionally during his SEC tenure. We reached out to the SEC but didn't hear back right away. Next, Ferrari will allow crypto payments at European dealerships starting this month. Today, the luxury sports car manufacturer announced its crypto payment expansion, saying it would support dealers in better addressing the evolving needs of its clients. Now, back in October, Ferrari partnered with BitPay, opening the door for U.S. customers to buy the luxury cars using crypto. Today's announcement about the European expansion doesn't mention the partnerships that will help facilitate these payments, but says the crypto will be converted into traditional currency immediately. The announcement also mentions that Ferrari plans to continue to expand this program to other countries this year. All right, back to spot Ether ETFs for our main story. I spoke with Andy Baehr, head of product at CoinDesk Indices, about the impact of these new products on crypto markets and whether the launch could open the floodgates for more crypto ETFs here in the U.S. Big crypto news this week. Of course, spot Ether ETFs launched here in the U.S. yesterday with volumes pushing past $1 billion on the first day of trading. You're obviously always following crypto markets, and so I'm curious to get your take on how it's going so far and what your outlook is for these products longer term.
Yep, it's a great day for investors in the United States because they are able to access Ethereum and the Ether token inside an ETF wrapper. The launch of the ETFs, which was not really a surprise, it was well understood, and the market players had plenty of time to prepare for it, went off without a hitch. I think this was less of a surprise or a gleeful moment as it was for the Bitcoin ETFs when a lot of these pieces of market structure hadn't been tested yet. So it was a pretty surprise-free, well-volumed start, but nothing really out of the ordinary. It's just great to see these products out in the open.
And how do you think it's going so far?
I think it's going all right. The volumes and the inflows are about 25% of what they were for Bitcoin. And of course, Ethereum, when you look at its market capitalization, is about a third of the size of Bitcoin in its crypto native form. So those numbers are kind of close to each other. It's a big lift for people, advisors, and distribution forces to understand the difference between Bitcoin and Ethereum, why they should provide some diversification with respect to each other. Ethereum has a very different use case than Bitcoin. It's a very different kind of proposition to the token holder. So a lot of education work needs to get done. So I think that the day one looked very smooth. We look for billions to come into these ETFs in the next 12 months.
Now, according to Bitwise CIO Matt Hogan, spot Ether ETF inflows could push the price of Ether past $5,000. In a memo last week, Hogan said new highs for Ether won't happen immediately and warned that the first few weeks since launching could be, quote, choppy as money might flow out of the $11 billion Grayscale Ethereum trust after it converts to an ETF. He went on to forecast that Ether could hit new records by the end of this year. And according to recent Citi research, spot Ether ETFs could see net inflows of up to $5.4 billion in the first 6 months since launching. Do you agree with these projections? Do you think they're realistic? What do you think will happen to the price of Ether now that spot ETFs are trading?
So Ether in its native form is about a $420 billion asset, and again, Bitcoin's 3 times that big. I think that we've seen those two forecasts and others which talk about price appreciation over 5,000, which is not a price record for Ether. So Ether hadn't hit its price record like Bitcoin did in the spring. So there's still sort of room to grow, even to get back to its current all-time high. I think it really comes down to how advisors and distribution forces are able to make the case of Ether as the sort of the heartbeat or the headquarters for tokenization, for stable coins, and for smart contract platforms. Now, on the other hand, as soon as people learn about Ethereum and about its growth prospects and about its cash flows, they're going to realize that unlike Bitcoin, Ether has competition. There are other smart contract platforms out there. And when you learn about one, you start to hear about the existence of the others. And so at a certain point, we are delighted that Ether ETFs are out there in the wild. We are not satisfied, though, that investors have all the access to the digital asset class that they need. Our CoinDesk 20 index, which trades in different parts of the world and is available in the US in a fund form, an SMA fund, tracks 20 assets, including almost a dozen smart contract platforms. So you can sort of play the whole field, not just the one that's currently available in an ETF. So we love to see inflows into the asset class. We would really love to see a way to have broad-based access to the asset class in a wrapper as convenient as ETFs.
Now, spot Bitcoin ETFs have certainly been a hit, recently topping $17 billion in net inflows since their debut back in January. Do you think Ether ETFs will prove to be as popular? How do these new products compare to Bitcoin ETFs? I mean, Bitcoin has about 3 times the value of Ether, as you mentioned. So could that limit the initial appeal of Ether ETFs, coupled with the fact that Ether might not be as familiar to many investors?
I think of Bitcoin, and the Bitcoin I hold it as a store of value that almost like a currency that's going to react in an inverse way to movements of the US dollar. I also think of it as a 15-year-old blockchain that's proved to be very secure and very well adopted. I think of it as something where the adoption is going to grow vastly over time. Bitcoin's function basically is to move Bitcoins between one person and another person. The simplicity of that, the security of that, and the fact that we've had 15 years of network growth, which just barely cracks the surface of the potential demand out there, makes a very exciting use case. Ether is a platform. It's an app store. It's a factory that helps the future of finance, that helps Web3 kind of realize itself. It's the most trusted smart contract platform. It's the one used in the majority of stablecoin transactions. So think of it almost like, this necessary piece of market structure for Web3 to make sense. As such, it has fees to actually make these things happen. Those fees are paid for in Ether. They're called gas fees. It's very commodity and currency-like. It's a growth prospect about the future of this kind of financial technology, whereas Bitcoin really is all about just the safety and security of Bitcoin. So in a way, they couldn't almost be more different, despite the fact that they're both blockchain assets in terms of their objectives. Investors should, over time, be able to see a lot of diversification benefit across the two. But again, these are 2 out of 23,000 or so major crypto assets. We think ultimately investors, when they're thinking about growth, will want a broad-based index to really capture more of the market.
What do you think the approval of spot Ether ETFs mean for other spot crypto ETFs? In June, VanEck became the first asset manager to file an application for a spot Solana ETF in the US. 21 Shares is hoping to offer a spot Solana ETF as well. What do you think will happen with those applications now?
So on the positive side, of course, we want as broad adoption and regulatory, guardrails to protect investors and to have products realized as possible. Solana is another layer 1 blockchain which competes with Ethereum. And I think actually when people start hearing about Solana and they realize that Ethereum isn't as singular as Bitcoin is for its function, they start to think, wow, well, maybe I need to look at others. Solana is not supported by a futures market in the United States the way Bitcoin and Ether are. And I think that that's going to make its approval process maybe take a different path. In other jurisdictions or in other regions around the world, virtual assets or digital assets are considered on their own merits. In Europe, there are exchange-traded products on digital asset baskets and a wide range of individual tokens. So we know that these things can take place in regulated markets. It's going to have to take a different regulatory path to get there. Ultimately, for most investors who are not spending a large part of their time thinking about digital assets, really owning an index is going to be the way that they can participate in the growth of the asset class without having to pick individual tokens.
Okay, that's all for Crypto World today, but we'll be back again tomorrow with coverage from the crypto conference Bitcoin 2024 in Nashville, and we'll see you then.